I've been trading price action for over 16 years, and in this video I show you how I trade my price action trading strategies and show you how to find the best trades every single day. So let's start with one of my favorite setups, and we are here on the higher time frame first, and then we go to the lower time frame to find the entry trigger. On the higher time frame, we want to first check the trend. Currently we can see that overall the market does look like it's in a sideways range. However, when we look at the most recent price history, we can see that the price rejected this support level down here and then started a very strong rally. We also want to identify levels. We have a very major resistance area here at the top, which the price is about to break. We also want to look for accumulations. Those are sideways consolidations. Here we can see that, and in the sideways consolidation, the most recent price action is very bullish. So you can see on this candle here, we have a very strong bullish momentum candle, and then this led to the breakout. So overall, although it seems like the market is in a sideways range, in the most recent price history, the market has been more bullish, and therefore we want to look for bullish continuation breakouts. I want to go one step further, and here we have a pattern on the higher time frame. This is a cup and handle pattern, and it's my absolute favorite pattern. So this part here is the cup. It's the first rounded move from the resistance to the support and then back into the resistance, and then the handle, and that's the key. The market pushes into the resistance, sells off, and then immediately is coming back into the resistance level. And that's what we want to find with a cup and handle. On the lower time frame, we are now on the 15-minute. Can you see the pattern that I'm looking at? Pause the video and see if you can find the pattern. It's another cup and handle pattern. We have a very strong resistance here that's also coming from the higher time frame. The market rounds off here into this short-term support level. By the way, this price action here is the most recent accumulation on the higher time frame. So we have the cup part here and then the handle. And this is really the key. The handle and the latest contraction. That's really where you see the bullish power in the market. And that's why the cup and handle is so important and so powerful. We have the initial rounding pattern. It doesn't show as much bullishness, but then here this completely changes. The market pushes into the resistance, sells off, but only slightly, comes back into the level, sells off, but almost doesn't have a sell-off at all this time. So the market is really being pulled into the level. If you're trading stocks, you will often see also a volume dry up here. I think Minavini called this the volume contraction pattern. So here you have a very, very low volume node. It shows the final phase of the accumulation. And then on the breakout, that's where you look for long opportunities. The stop loss is often placed either below this low or below the low of the handle. And then you could choose any of your preferred take profit approaches, 2-to-1, 3-to-1, a trailing stop loss approach. There are many options for those types of trend following trades. So recap, we go with the higher time frame trend. You can see the market has pushed higher. We are trading the breakout on the resistance level. And then on the lower time frame, that's where we then time our entry with the pattern on the volume contraction here. And then this is classic what happens after the breakout, a very strong momentum release. Here you can see there's a lot of pressure building in those contraction periods, and the pressure with the momentum is then often released once there are no more sellers left and there are only buyers in the market shoots higher. In a very short amount of time, the market covers a large distance here on the price chart. If you like this way of trading, make sure to check out my ultimate trading program. It's a trading course where I summarized my 16 years of trading experience into a few hours worth of video content. But there's so much more than just videos. You receive support from me 7 days a week. Every day when you have a question, you can reach out, ask me questions, and I will respond to you 7 days a week. The trading program here consists of a trading course. There are over 80 new videos that I've never shared anywhere else before. The mentoring part is included. We have regular live webinars, and you will also be part of a lively community of traders from all around the world. I'm not using other teachers, I'm not using other mentors. You will be able to interact with me always directly. You learn my day trading strategies, my swing trading strategies, and you can apply to all the different time frames. Whether you are a completely new trader or you already have some experience, the course will help you make the step to the next level. The course in this program helps to build up your trading knowledge step by step. Here's a rough outline of the course, and as I said, there are over 80 brand new videos, so there's a lot for you to learn, and you will learn my actual trading strategies. I have dozens and dozens of trade examples for you. I show you how to backtest it. I give you my exact price action entry rules, and I'll show you exactly how to trade and how to prepare your charts. We also currently have a discount running, so make sure to check the link in the video description. And now let's get back to the video. Here's another example, completely different pattern, but also very important. So the market is coming here from an uptrend, it's moving over into this sideways distribution, and here we have a very different picture. We don't have any push into a resistance like we had previously. In the previous example, there was always an accumulation underneath the resistance where the market kept pushing into a resistance level sooner. This isn't happening here at all. What we see is that, first of all, we have lower highs. That's very different. We also see that we have strong periods of selling here, for example, and then here, of course, as well, with a very, very strong candle here recently. So those strong selling periods with the lower highs show us that in this case, there's not a lot of bullish interest and the market is not interested in advancing the price higher here. So you don't have the contraction, you don't have the resistance that is building the pressure. Here you can see we have a very opposite signal. In this case, we have a very, very bearish signal. We have the breakout. In such cases, when there's such a strong breakout with this long breakout sequence where you have multiple bearish candles in a row, I don't advise to jump right into the bearish trade. What often happens is that you have those retests, and often they don't stop at the support and resistance level. This is often a trap. The market is often pulling away back into the pattern, and here that's where you want to look for your entry signals. You want to see that the market is pushing into the level. That's also what we call a fake out. Could also be a shakeout. The market is squeezing everybody who shorted prematurely here, and you want to wait for the market to show you more signs of weakness. A big problem or a big mistake that many traders make with those types of retests is that they don't wait for the strong confirmation. You want to go short, but you fear that the market might take off without you. But it's so important that you wait for the clear signal into your trade direction. You want to see the market push very strongly into your trade direction, and this is happening here. And then afterwards you can see what happens. The market, this may have been a news candle, so we don't know that, but the general idea of this trade pattern is that you wait for the shakeout or the squeeze, then you wait for the momentum return back into your favor, and that's where you look for your entry signals. Let's take a look at another very interesting pattern with a multi-time frame approach. Here we're on the higher time frame, the market is breaking out, here we are leaving a demand area, and the market is coming back into the demand area. A lot of supply and demand traders make the mistake that they blindly jump now into a long trade because they believe that the market has to push higher from the demand area. That's absolutely not the case, and you should go to your lower time frame. We go all the way from the 4-hour to the 5-minute. You can also use this in an approach where your higher time frame is the daily chart, and then you go to your 1-hour or your 15-minute. And what you see is that the market is tapping into the level, but it's tapping into it multiple times. It's almost overshooting the level. And this is happening actually quite often, where you see that the market is not stopping at the level, but shooting over the level, giving you a squeeze. For everybody who is entering prematurely, they will be squeezed. I call this the triple tap. And what you will see is that if you throw in a RSI or MACD or stochastics, you will see that you have a massive divergence here as the trend is slowing down. So it's a great signal that the trend is slowing down, but we don't want to be premature in the trade. We are going, if you look at the higher time frame, against the recent short-term trend. So the market has been recently clearly in a downtrend, and we don't want to go against it. So what we do is we wait for clear signals that the market is rounding off. We wait for the market to make a higher high, which is happening here on the breakout. It's a good breakout, but what I recommend is if you are trading reversals, like here, you're trading a bearish reversal on a bearish market, you want to go long, you wait for the retest. You want to see that previous highs are becoming lows. So here we have a previous swing high and it's becoming a swing low. And at that point, the entry is much, much safer. And you can see how many confluence factors we stack up on top of each other. We have the higher time frame level, we have the lower time frame triple tap with the divergence, we have the market breaking into a new high, we have the retest, and we have strong bullish momentum that is coming into the market. Just comparing the bearish and the bullish candles, we can see that recently the bullish candles there are many more and they're also much stronger. And then afterwards you can see from here on the retest, the market completely changes. So if you are struggling with trading reversals and if you're trading levels and you often get caught on the wrong side, I would recommend to be a little bit more patient. You might fear that the market is taking off without you, but let me show you that this is happening only very rarely. In 90% of the time, you will be glad that you waited for more confirmation, because then you are trading a much stronger signal. Let's take a look at another example. We are right here on the 15-minute lower time frame. Can you identify the pattern that I'm looking at, and can you find what is interesting about this? Is it going to go higher? Do you think it's going to go sell off? What do you think about this? You may pause the video here and come to your own conclusion. All right, first we want to draw the levels. We have a very strong resistance level, and then we also want to look at the lows. The price shot up here clearly, then we built a base here, we built a slightly higher base here, and then now it comes to contraction period. In previous videos I also called this or named this the pressure buildup. And exactly that's what's happening. There's a lot of pressure building underneath this resistance level. And this could be news driven for all we know, it doesn't really matter. But what you will see is that after such a strong push, the market often does take some time to digest what has happened. And you will often see profit taking, you will see new traders accumulating. And very often you will then see, when this contraction happens, a breakout. The breakout has to be very strong. That's exactly what you want to see. If you're trading with volume, you want to see high volume peaks here on the breakout to show you that there's actually a lot of participation behind this move. And then again, the momentum is being released here after the pressure has been building for such a long time. In a short amount of time, the market shoots up really vertically here and makes its way up. So again, we are trading a trend continuation. We're coming here from an uptrend. Then we have our sideways consolidation here. We find here signs that the market is building pressure and accumulating. And then on the momentum release, that's then where we look for opportunities. Now by now, you already know how to analyze this. We're coming from an uptrend, so we are in a bullish environment. We're building here the resistance level. We have a sell-off, and very often you will see those, what stock traders call shakeouts. We have the support level here. The market is shaking out, but immediately pushing higher. So you want to see a strong rejection. You don't want to necessarily see a strong close here. That would be a signal against the continuation. But here we have a shakeout. The market is building a lot of pressure, not being able to pull away from this resistance. We have a breakout, and then you can see with a dirty retest. This breakout wasn't as strong as what we have seen previously, right? Here on the last example, we have a very strong breakout. Here the breakout was mediocre, not great. The market is not able to close at the high of the candle. There's still some opposition left. And then what happens is that you have your pullback. We call this a dirty retest. It's not a clear retest of the resistance, but it's a dirty one because it's pulling back into the pattern. And then you get your final signal. This is what you want to see. You want to see strong momentum come into the market, preferably also with high volume if you trade a market where you look at volume. And then that's where you find your good opportunities. The market pushes higher, doesn't move as smoothly as we've seen previously, but advances higher eventually. So you can see not always will the market shoot up higher in one straight line. Sometimes the market will unfold in this natural trend rhythm. You want to see that support holds. You don't want to see that the market is making lower lows. And then the market, as it goes higher and makes higher highs, that's where you then ride your trend. I quickly want to say thank you for all of the comments that I see on my YouTube videos. It's great to see this lively community here on YouTube. Unfortunately, I cannot always answer all of the comments. But if you want to get in touch with me and get mentored by me and learn my trading strategies, make sure to check out the link in the video description. I've built a unique trading program where you not only get access to over 80 brand new trading videos, my actual trading strategies, and a lot of trading material with thousands of chart studies, you also have the ability to chat with me 7 days a week. We do have a private community with a chat room in the program, and you can reach out to me every single day, 7 days a week. I answer your questions, I help you analyze charts, and anything else that comes up and that you wonder about when it comes to trading, I'm there to help. So make sure to check the link in the video description to learn more about my unique program. And if you want to get in contact with me, sign up and you'll be ready to go.